Are you keeping a close eye on the banking industry? With tariffs, changing trade policies, and the uncertainty surrounding tax reforms, there's a lot happening in the financial world right now. In this video, we'll dive deep into how these factors are shaping the banking story of the decade and why you need to be paying attention. We'll also discuss the role of major financial institutions like JPMorgan and Goldman Sachs, who are strategically navigating through these turbulent times. Stay tuned, because the next few minutes could change the way you think about the financial market. The financial market's recent turmoil has led to mixed reactions, with large banks reporting solid earnings but facing significant volatility. Despite starting the day with a dip, the stocks of major banks like JPMorgan and Goldman Sachs eventually made strong recoveries. But this short-term optimism doesn't tell the whole story. The broader market is still grappling with the impacts of uncertain trade policies. Banks have been able to weather the storm thus far, but the big question is, how long can they maintain this resilience, especially as we face challenges like volatile stock prices, fluctuating interest rates, and political uncertainty? A central theme discussed in the video is how tariffs, both existing and potential, are affecting corporate decision-making. CEOs are navigating through these complex waters, uncertain of how policies will evolve. This is leading to a slowdown in critical activities like mergers, acquisitions, and IPOs. In fact, what was supposed to be a big year for M&A and IPOs hasn't materialized as expected. Instead, businesses are holding back on significant investments, waiting for clearer guidelines. The challenge here is that tariffs create a ripple effect across industries. When companies anticipate negative margins due to trade policies, they become more conservative in their approach. This cautious stance is not only affecting the larger companies but also banks, who rely on mergers and acquisitions to drive growth. Despite the broader uncertainty in the market, JPMorgan has emerged as one of the standout performers. Its solid earnings and resilience during a period of extreme volatility show why it's considered one of the best in the business. The bank's ability to thrive during challenging times speaks volumes about its strength and adaptability. JPMorgan's strong capital position is a key factor in its success. It has proven itself capable of managing market fluctuations and volatility, ensuring that it remains a stable player in the financial landscape. While other institutions may struggle, JPMorgan is poised to continue its upward trajectory. Consumer sentiment is another key variable influencing the banking sector. According to the latest reports, consumers are spending less, particularly on non-discretionary goods. This shift in consumer behavior is being reflected in the first quarter data, which shows a clear pullback in spending. Banks are now adjusting their strategies to deal with this new reality. Institutions like Capital One are leveraging their strong networks and infrastructure to continue to capture value, even as short-term consumer behavior presents challenges. The focus is shifting toward long-term strategies that can help maintain profitability even during times of economic slowing. Looking ahead, the outlook for the banking industry remains cautiously optimistic. While there's less enthusiasm than there was earlier in the year, the market is still ripe with opportunities, especially for institutions that can weather the storm. The key to success in the coming months will be the ability to adapt to changing policies and consumer behavior. However, the ultimate game changer could come from external factors such as trade policy breakthroughs or new tax reforms that could re-energize the market. Until then, the banking sector may continue to trade sideways, waiting for the right catalyst to push things forward. In conclusion, the current state of the banking industry is deeply intertwined with the uncertain economic landscape shaped by tariffs, regulatory policies, and shifting consumer behavior. While major players like JPMorgan are demonstrating resilience, other factors like trade uncertainty and potential changes in tax policies will continue to shape the outlook for the sector. As investors and consumers, we must stay alert and understand how these macroeconomic factors are influencing the financial market. Stay tuned for more insights into how global trade policies are impacting your investments, and keep watching for the latest updates in the world of finance.